It's been a tremendous day with incredible conversations, and appreciate all that we've learned, heard, and made us think and think through exactly how we both need to be as a fintech company, but also thinking through the balance in regulation and kind of what we can do for consumer protection. And really excited to meet, to have today one of our founders, Ryan Sandler, who is the co-founder and CEO of Truework, which might not sound like the sexiest kind of company, but it is one in which is critical, especially to the infrastructure. And he is reinventing what we would call the consumer bureaus, rating agencies, and thinking through how we need to change the landscape of it and how we need to move. And so, Ryan, I'm looking forward to this conversation. And let us just start with, because you can explain your company far better than I. You are at LinkedIn, and all of a sudden this idea pops into your brain. This is not something that usually is normal. So tell us, what was that thought bubble that you had that made you start Truework?
Yeah, thanks so much, Penny. So as Penny mentioned, I previously worked at LinkedIn, where I created a product called LinkedIn Salary. It was a competitor to Glassdoor, if you ever use that. So I cared a lot about salary transparency and privacy and some of these tenets. And then I discovered this world of income verification, where within the credit bureaus, it's very much more commonly talked about their credit business, but they also sell income data. Specifically, one of them had a very dominant position in the marketplace, you might say. And the space was very under the radar, very unsexy, riddled with privacy issues. And this was what I was looking for to go and go solve, is how can we bring control and ownership of this really important data, your income data, to the consumer, where right now it's this really black box, and we'll talk more about how it works.
Yeah. And so you thought, how can I access it, or what is it that I can do? Was it more from an access? Was it more from a cost structure? Was it more from making sure that I just need to fix what the credit rating agencies are doing, or consumer?
Yeah, it's as mentioned, it's one of the big three elements in getting a loan. They check your credit, your income, your assets. And for income in particular, it was just so broken. I mean, what the banks or the lenders really cared about, what was broken, was that there's such low coverage. I could only verify 30% of the population. For all of these other workers, including 1099 and these really growing demographics, it's really hard to verify their income. So that was the pain point we're solving directly that we found in the market. And then for me personally, it was privacy. The fact that a single company is storing all this data centralized for 30% of Americans with very, very poor security was really scary, honestly. That anyone can kind of go onto this website and answer a couple of questions and get your income information. Like, that was scary. And so, can we create a better solution that was more private? Was really why I started it.
And so you put together this thought, you put it down on paper. Curious what your first pitch deck looked like, and maybe what your pitch deck for your Series C, congratulations on your recent round. What was that first concept, and how many people said, not really my thing? And how did you get adoption therefore, and maybe how you pivoted now to what you showed in your Series C?
Yeah, absolutely. Yeah, I mean, I think early on, especially when it's just a few people in a deck, you're selling this big dream that we could take on this massive $30-40 billion company, and there were definitely like.
What was your TAM at that point?
The TAM of the market, we would say, was like $5 billion. Mm-hmm. Of course, we had zero in revenue.
Yeah. But a big hockey stick.
Yeah, a huge hockey stick of where we'd go, and some of the core tenets have definitely remained the same, but. Investors really had to believe early on that this is going to be a business that takes time. Like, there's a lot of compliance, regulation. You have to go and partner with tons of payroll and employers we'll talk about. It just takes a lot of time. And so there's a lot of people like, there's no way you're going to be able to compete with this bureau. This is a multi-year process. And so really showing how compelling it is to lenders, especially as you get more and more data, is something that people had to believe in. Yeah.
And what was your first big win that kind of said, this is a viable company, a viable solution?
Yeah, I'd say like the moment where we realized we had quote unquote product market fit was about a year into to starting the company. Soon after we launched, and we knew it would take time to get to large enterprise banks. A lot of security requirements, and so we put up a self-service product for smaller banks, smaller lenders, credit unions, where they didn't have to plug into an API. They can just go in and enter a credit card and get information back. And that thing started becoming really, really popular really quickly. I think we, went from like 0 to hundreds of customers in 2 months, and we realized, wow, this thing is really working. People are just coming and using this themselves. And then later on, we went to the big banks and big lenders.
And so in that first iteration, was it consumers that were using it to be able, like, how were you getting, they were asking for a car loan, they were asking for an auto, what were they
Yeah.
asking for that they were using the service?
So it was loan processors at lenders.
Okay.
So it might be, loan processor Quicken Loans, who says, I need to verify income for this mortgage. I need to find a vendor that can do it for me. So far I've only dealt with really one vendor, and they would discover us maybe through Google and start using the product.
And would you say you have a competitive set? Is there a competition other than obviously the established brands, but is there other fintechs or companies that are in this trying to do the same thing?
Absolutely. I think we're excited by the fact that since we launched the product in 2018, there's been more and more players in the space, which is great. There's more competition where pre 2018 there was really one player. So we're pretty cooperative with, I would say, a lot of other folks taking on different attacks on the space, you might say. Whether that's through getting the data through scraping, getting the data through partnerships. We are cooperatively working with different players as we kind of go against the legacy.
And I was going to say, how have the incumbents or the legacy kind of reacted to you?
Yeah, it's I'm careful in how much I speak about them, one company in particular, but generally they don't make it easy. You can imagine these are massive businesses, and we're still 100-person team, and I think we're excited about discussions in Washington where they make it especially hard is with exclusive access to data, right? And so we talk a lot about open finance today. We kind of think about this world as open payroll, you might say, where consumers should be able to share their income data with whatever lender they choose. And it should be really easy and instant to share that data. But if one vendor intermediary has exclusive access to a lot of that payroll data, they can charge whatever they want for the data. It's a very, very anti-competitive lens, and you can imagine they are doing everything they can to retain those exclusive relationships.
And who gave them the exclusive rights?
It's the payroll platforms themselves.
Okay.
So where you get paid on your paycheck, that company is a payroll platform. There are 10, 20 major ones. We work with some major ones like Gusto and Rippling and ADP, but you can imagine there's many, many more on that list. And some of those may have created an exclusive relationship with a bureau where it allows only that bureau to get access to that data.
And are those long-term usually contracts, or those how long do those go in? What's the opportunity to break those contracts up? Like what would cause them to be non-exclusive or enter into a different agreement?
Yeah, well, we think, of course, it's better for the consumer for it not to be exclusive. More competition leads to cheaper price to get access to that data. And we show those payroll partners that they could actually make more money if they work with more providers. They will have a better user experience for the employees on that platform, that whenever they go to a lender, it's easy to verify because it's not just one player that they get access. So they definitely expired. You can imagine we are on top of many of them and pitching our case, why they should be non-exclusive and work with any consumer reporting agency, not just one of them.
And is there things legislatively that can be done, regulatory that can be done to kind of break up a little bit of this monopoly, or it's private company engaging in exclusive contracts?
Absolutely. I mean, I think regulatory-wise, we are of course responsible to the CFPB and to the FTC as a CRA. So starting from day one, we defined ourselves as a consumer reporting agency. Of course, it means that we have to handle the data in a certain way. It has to be accurate. And we think any company handling this type of data should be a CRA. And it's been important for many of our banking and payroll partners that we are a CRA.
What was required for you to be a CRA?
A lot of it's in the product, right?
Okay.
And these are product requirements that we think are innate, should be in any product giving this data, right? Consumers should be able to have access, see what data is being delivered. If the data is wrong, there should be a way to dispute that data. And so we think you should have that accountability as someone handling this really sensitive data.
And how much do you think, we do see complaints over at the CFPB on the bureaus, a long list of either people getting their credit scores wrong or not having, certain things were taken into consideration, not taken into consideration. Does the same apply on the employment data? Is data coming in wrong?
It can. I think what's really essential to the way Truework works as a digital platform is you're actually able to show the consumer in real time what data is going. You can imagine if you're like a sales employee, especially, you have a base salary and then you have your bonus, and that bonus may not be represented well when you go and apply for a loan. And so actually showing the consumer, like, is this right? This is what's going to be shared with Bank of America, has been really important to catch any inaccuracies. You can imagine if it's a complete black box and you go to you apply for a loan, you don't even know this data is being shared. You don't know if it's accurate either. So absolutely, there can be inaccuracies. It can also be hard to track sometimes if it is a black box. But we think that consumers should have access to that data as much as possible.
And do you see is that something that, I know we're talking 1033 open banking, but is the next evolution when we talk about open finance? Is that where you see kind of this role, the role that you're playing, kind of fit into to be able to allow this greater access to portability of data?
Absolutely. So we're really excited about 1033. It doesn't currently cover payroll, but we would, we'd love to see, similar guidance for payroll data, right? I mean, namely that data should be open and require consumer consent. Anyone who is a regulated or accountable intermediary should get access to that data, not just a single entity. And that's what we consider very much a part of this concept of open finance. Not in a way where someone can easily just switch their payroll. It's just that in a read-only way, any lender can check how much money you make. Really simple.
And how do you work with, or do you work with 1099 gig workers, those that that are more contract workers?
It's a huge part of what we do in terms of extending coverage of payroll data. So we have a big partnership with DoorDash, working on partnership with other folks like them, where if you're a DoorDash driver, your data can instantly be shared with that lender, which was really hard to do before. A lot of lenders would decline 1099 applicants because they cannot see a consistent income coming in. And as much as DoorDash together with Truework can show that this income has velocity, it's steady, it can be really impactful for those folks getting loans.
And and how does that actually work? So DoorDash is the employer, or how does that work? Especially with something that can have multiple sources of income too.
Absolutely.
If you have a DoorDash plus a Lyft driver plus an Uber, that they do all three, are you able to capture someone doing all three?
We are. The lender will come to us and say, I want to check their DoorDash history, their Lyft history, their Uber history. With DoorDash, it's instant because we have a partnership with them. So the lender will get the information back as soon as consent is given. With the others, there might be some amount of friction. The user might have to log into their Uber account, then their Lyft account. But all in all, the lender gets back all three positions and can verify their income.
And if you're wanting to go buy a new car, how fast can you capture that for someone sitting there waiting for it to be verified? Within minutes? Is it days? Does it take a little while?
Yeah, so 25% of requests are fully instant now, something we're really proud of. 45 million records we have access to with the user's consent. So, as soon as they say, I want to share my income on a Quicken Loan application or when they're buying a car in person, they get that information back. And we're trying to make that 100%, as fast as possible. When it's not instant, we bring it back within minutes, within an hour. We'll tell the lender how long it will take. And, again, this is really impactful for this data to be as easy as a soft credit check. It's instant. You can get that information right on the spot so you can approve for a loan.
And is there a difference in how you're processing your data, whether or not somebody's doing a soft pull versus a hard credit pull?
With income, we have not, created a difference between them. And part of it is we don't think there should be, any kind of ding to your report. There should be no concept of a hard pull. And so no, there's no difference for us.
And where do you see, where do you see your future? Is it just greater adoption? Is it displacing some legacy? Where do you see Truework kind of heading? And is it always going to stay in employment-only data?
Yeah, so right now we're really focused on this world of income employment data. We've have a lot of mortgage lenders on the platform, and we're getting more and more traction now in consumer lending. It's something where we're investing a lot. This data is really important for mortgage. There's a lot of guidance from Fannie and Freddie, but on the consumer side, it's a bit more discretionary. For an auto loan or credit card, do you use credit? Do you use income? It's up to the lender. And we're seeing, especially during recessionary times like this, lenders want to bring in more alternative data, right? You're flooded with applications. How do I look at someone's income as well as their credit? And so getting our API layered in and as much of these different types of lending applications is where we're focused on now. And in the future, we think a lot about other types of financial identity like income that has been really hard to access. I think there's a lot of interesting talk about rental history data right now. Some companies doing interesting things there. Those are the types of alternative data that we're interested in as well.
And did you all engage at all with PPP, with any of the lenders involved with the PPP loan process? And were they able to, I know it was, it took a little while for especially fintech companies to be able to kind of be allowed to kind of lend during the PPP program. Were you part of that as far as an income verification part?
Not directly. We definitely thought about how we could help, but it was much more focused on B2B lending, where we focus on B2C lending. So not as applicable. I know Plaid did some really cool stuff there. We've definitely been more recently with student loan forgiveness is something that we've had a lot of really interesting conversations. The problem of verifying your income to get student loan forgiveness is pretty messy right now. So we'll see if there's anything we can help there.
And love to get some insights on that. I mean, how is that process going?
It's, you can imagine, there's different amounts of urgency per different parts of the process. And for income verification, I'm not sure it's the highest urgency. So it is pretty messy. I mean, someone just has to go and upload pay stubs and prove that they make less than 120K. Areas of possible fraud, and also it just takes a long time. Many people don't know how to get their pay stubs. So, we'll still see if there's opportunity, but so far it's been a bit slow.
And you do bring up fraud, obviously is something that's of interest very much to our regulators. Talk to me through how you are preventing fraud and not having someone mimic somebody, or what is the biggest issue you faced from a fraud perspective?
Yeah, I mean, I think often what bureaus face in terms of fraud, I mean, of course, there's fraud on the consumer side, but there's a lot of fraud also on what we call verifiers. If someone says they're a lender and asks for information, we have a very, very strict process on how we approve lenders or how we approve companies to come and actually access information on the platform. And so that's where, unfortunately, I think some of our competitors have faced some challenges. If someone really wants to get access to your income or sensitive information, they can on certain systems. And with us, it's really, really difficult. We go through a number of checks and hoops to make sure that someone seeking illicit information can't actually get it.
And do you, when you say you vet your lenders, do you vet them from safety and soundness, from an APR standpoint, meaning you don't work with anybody over a 36% lending vehicle at an APR? How do you verify, or how do you vet your lenders?
Yeah. Well, for sure, first and foremost, are they a real lender or a financial institution that has permissible purpose, per being a CRA, to actually access that information, right? And then secondly, where we really focus is the consent. Where is the consent in their process to actually get us information? If it's not there, we're not going to work with you.
So we've seen, we're in Washington and we keep bringing this question up, and so we'd love to get your lens as well. Shift in Congress, likely. Looks like Republicans will be leading the House Financial Services Committee. Democrats will still stay in control of the Senate. Obviously, President Biden is still will be the president. Do you have a sense of kind of what might change from a regulatory standpoint with this new Congress?
Yeah, I think for us, this is a really bipartisan issue, like 1033. When it comes to the bureaus, I think there's a lot of momentum on both sides to increase competition, right? I think there's many people who are not a fan, you might say, of a public credit bureau. And I think we really strongly think that the right answer is more private competition. And so when we recently wrote a letter to the FHFA on what are some of the priorities in terms of guidance that we think there should be around this data. And first and foremost, we mentioned this concept of 1033-like reform for payroll data, how it should be open and accessible with consumer consent. Number two, the companies, actually the intermediaries actually providing the data should be regulated and accountable. Number three, that data should be instant. Number four, it should be accessible via API. And so we're really pushing for, we think there's just so much opportunity for consumers, so much increased coverage of consumers, including folks like 1099, that can be served with this, with some updated guidance on how we can make this data more open.
And are you state regulated and federally regulated? Are you having to adhere to 50 different state laws?
Fortunately, federal.
Federal.
Not really state, which is a great thing about this country.
You're the one with the federal preemption, which is great. I want to step back just a second and go back to your founder story. If you'd known what you were going through and where the company is, would you still have started this type of company?
Absolutely.
And what were some of the lessons, I guess, along the way? Have you made some changes to your baseline business?
Yeah, it's a great question. We have a multi-sided marketplace here. On one side, we have the lenders. The other side, we have payroll platforms and employers. And for quite a long time, a couple of years, we didn't really care about the lenders at all, frankly. We were just focused on growing the data source, working with payroll platforms, working with employers, and then kind of had this shift where we realized we need to go and bring on the big banks, bring on big lenders. And I think I wish I did that a bit earlier. But no, I think generally I'm happy that we took the CRA stance early. I'm happy that we invested in Fannie Mae Day One certainty early, which we just got last year. It takes a long time. And hopefully we'll soon have Freddie Mac approval as well. But I think we realized pretty quickly, like, you cannot sell this type of data to banks unless you're approved by Fannie and Freddie. They just will not use it. And so that realization came a couple of years in. Maybe wish I had that a bit earlier.
And you went mortgage first versus student loan versus others. Why'd you go with mortgage first?
Yeah, mortgage. It's a great question. Mortgage is the biggest market. I mean, first off, like the biggest size loans, the more important income in this data becomes. And also, it's pretty much required per Fannie and Freddie. They have very strict guidelines for mortgage. If you want your loan to be bought by Fannie down the line, which most big banks do, you have to verify income in a very specific way. And so with mortgage, if it is pretty much legally required, there's a really big urgency, you can imagine, to get data and get it cheaply and accessibly for income.
And how much of your business is working? You said you went into the big banks. You're now hitting that market penetration. But what percentage, or do you work with Novo banks, novel banks, others, a SoFi or others that might be newly chartered or still waiting for their charter?
Absolutely. And you can imagine, kind of our go-to-market, our ordering of things. It was non-bank lenders first for us, and then the banks later because of requirements like Fannie and Freddie. The non-bank lenders had a bit more flexibility. Folks, Quicken Loans, you can imagine, Rocket has a ton of flexibility, and folks like SoFi as well. So those were definitely more of the earlier customers, and now only are the larger, more legacy banks.
And what is your market penetration in those more legacy banks, or is the one that has the black box? Are they just so dominant? What's the shift in market cap or market share?
Yeah, I'd say we have like 20% of what you consider major banks. So still a long way to go. They are, for good reason, sometimes the slowest to adopt new technology. And we're excited that this year in 2023 will really be the 2 years that we're bringing a lot of big banks. When we think about Non-bank lenders, we have the most of them at this point.
And what we did see during the pandemic was a spike or a spikiness in cars. Used people buying more used cars, not used cars. You just saw an incredible amount of spike of people buying cars. Did you all see that come through in your own data of being requested? And would be curious to know what your data is tracking right now as far as what consumers are spending or wanting loans for.
100%. So we are, we do have some horizontal view here from working with so many lenders, which has been really interesting over the past couple of years, especially. I mean, of course, during COVID, you saw prices of auto and also mortgage volume was pretty insane, where we were brought in with pretty high urgency for both mortgage and auto. Now you see, of course, mortgage being depressed with high interest rates. We'll see, somewhere on average of 20% decline in volume for mortgage customers for new originations. But with a lot of other consumer lending, especially personal loans and credit cards, I mean, we're seeing higher levels now than since 2008, which is not that great of a sign, obviously, right? Where people have very low savings right now, and personal lenders and credit card lenders are being overflooded with applications right now. So for us, because we serve all of them, it helps our business because we're able to service some versus others during booms versus busts. And you see that in the bureau's business as well. But it's been really interesting how that shift has happened really greatly.
And what did you see during COVID? When you did have the lockdown, when you did have a flood of government money coming to individuals as well, and boards online, maybe shopping online for cars and mortgages, or a lot of shift. What did your data tell you about kind of where consumers were headed or where they were spending during COVID?
Yeah, well, the digital transformation was just so obvious, right? For the first time, you're seeing people buy cars online, buying houses online, and I think we were surprised. Everyone was surprised. Where these lenders are being flooded with tons of volume, but they didn't have anyone in the office, right? It has quickly shifted to the remote world. APIs like ourselves and many others here saw a boom during that period, right? It's hard to verify income the old way you're doing when it was done by 100 people in a room. They need to start using third-party vendors and help them scale remotely. So a lot of really interesting, transitions that really happened during COVID. I think people really started to see the urgency of automating these processes, just not having human dependencies in your organization. Someone to have to fax another person at the HR department it becomes really impossible when HR department's working from home during COVID.
And did you see that network effect kind of take place in a way that hadn't been done before COVID? Just your adoption rate went up. People were talking like this was just an easy API integration, much more so.
We definitely did see a lot of growth in COVID. Both the mortgage market exploding as well as this digital transformation happening, and I think it's where the volume was shifting. Right, we would go from seeing some volume shifting from legacy kind of more in-person experiences to the Carvanas of the world. Right. These fintechs coming to us and saying, our volumes are exploding 10x month over month. We just need help here, and that was really interesting. Is where people were going to buy their cars much more online during COVID, and I mean some of that's come back for sure.
I was going to say, where is that? Is it still spiky or is it flatlining? Where is it now?
Yeah, I think you've seen much more reversion to the mean, for certain in-person purchases, but like there has definitely been an increase overall. But yeah, I think auto loans, for example, like, once COVID started ending, people were going back to in-person buying.
Yeah. Where do you think is the next sector? So you have mortgage, you got cars. Where is your next sector that you're going to be going into?
Yeah, another thing I didn't mention, of course, with mortgages going down is rentals is a really, really large volume right now. Another area where, a ton of folks are trying to come in and plug in. You need better credit history, you need better income history. They want rental history, as mentioned before. So rentals, background checks, life insurance. There's just a lot of verticals that can use our API, and it's just prioritizing.
And we'll leave on one note, since you are a founder CEO, would love just thoughts, especially for the virtual audience, a piece of advice as a founder, as starting a company in a disrupting a very entrenched industry. any advice you would have?
Yeah, I'd say we spend a ton of time upfront really validating the idea and finding this product market fit. And the idea is one thing, the passion, but really spending time with customers early to validate the idea, validate your approach will save you a ton of time down the line.
That's great. Well, Ryan, thank you so much for coming, and thank you. And with that, we are closed. This is the end of the FinTech Summit. So thank you all.
Thanks so much.